Hello and welcome to the Roots Collective. Tonight's workshop is all about how to legally structure your business. And we're super excited about tonight. I know I'm excited because that is probably the number one question I get in my email or my DM, which is should I be an LLC? Should I be a sole proprietor? What is a nonprofit? And so tonight we have somebody that's going to answer those questions for you. And if you tune in later and watch this as a recording, and if you have any questions, please DM me, email me, get in touch with me, and we can make sure that we get your questions answered. I apologize if my internet is going in and out. I think my internet is slow, but hopefully you guys have heard me and can hear me. But right now, at this time, welcome, and I'm going to bring up Mr. Chris Trump, attorney, who is going to be facilitating for us tonight. Remember, if you have any questions, put those questions in the chat. We want to get to you. We want to answer all your questions. We'll remind you guys throughout the hour if you have questions to put them in the chat. But if you've been watching us for the last 6 or 7 months, you know the routine, you know the deal. So, welcome to tonight's business conversation.
Well, hey,
All
Tanika.
right, Chris, how you doing tonight? Go ahead and introduce yourself
Good,
and
good.
take it
Yeah,
away.
good. Well, thank you for the opportunity to speak to everybody. I can't see all of you, so hopefully this is all going well. You can see us. But Tanika was kind enough to invite me to speak to you guys about the choice of entity for your business. Just to get this out of the way, there is no relation to Donald Trump for me. So in case you're wondering that, it's probably, I'll just say right now, whether you like Donald Trump or you do not like Donald Trump, it's been a tough time to be named Trump. Let's just say that. So that said, very glad to be with you guys today. Choice of entity is an issue that we advise on all the time. Tell you a little bit about myself. I am an attorney with Edgerton McAfee. I've been practicing for going on 20 years now. I know it's hard to tell as youthful as I look that that's the case, but I've been at Edgerton McAfee for a very long time. Matter of fact, Tanika herself used to work at Edgerton McAfee as a runner with our firm many years ago, and so she's quite the esteemed alumni of our firm. So she realized that she likes being on her own though. So, anyway, but it's great to be with you guys. Choice of entity is an important decision. It's becoming a lot more simple these days because of a lot of those issues have kind of been made easier by the IRS, and different and more flexible entity types have been created. But just to start out, I don't know how many of you guys are out there, but just in the first little part here, if you wouldn't mind, just in the chat, just put a couple of things in there about yourself. Number one, what if you've already started a business or looking at starting a business, if you'll put in the chat kind of what type of business you're wanting to start, whether it's like a contracting business or a restaurant or whatever. If you could just put that in the chat, so I can kind of see who all's out there and maybe tailor it a little bit to you guys. Also, maybe how many years you've been in business. And if you have an entity currently right now, which entity did you choose? Just and you can put that in at any time during the conversation here if you like. So obviously this is one of the first questions that you get when someone's starting a business, and that's, how do I structure this? And there are a plethora of types of businesses to choose from. And so today we'll talk a little bit about as you're trying to make this decision, and I'm advising my clients, there are several things that I'm trying to kind of to take into consideration. First one is what type of business that you have. What exactly are you? What is the activities of the business? What are the risks involved with those activities? Because certain types of businesses have more risk than others, and you may have a stronger need for limited liability protection. So that's one of the things. The question, and that lends itself to the second consideration, which is, do you need an entity that provides liability protection? And what we mean by liability protection is, do you as the owner have any liability for the debts and obligations of your business entity? So sometimes, there's certain types of businesses that's a very, very important thing to have. Other types of businesses not as critical, and we'll talk a little bit more about that in a moment. Another consideration when you're trying to decide what type of business entity you choose is the tax implications. There are certain entities that have different types of taxation of them, and therefore you may decide that that the one entity over another based upon those tax implications. Another thing that I ask my clients is what kind of exit strategy do you have for your business? Some people look at their business as primarily a lifestyle business, and their real focus is just trying to just have a living through it, and treat it more like a business that is just like someone who maybe who's a painter, not looking to grow this large business with multiple offices and that type of thing. And so they're just going to live. They're going to just have their business. It's going to be their lifestyle. It's their profession or whatever it is. And they're not going to really try to scale it large scale and sell it to some other company, in the future. And so that lends itself to, a particular type of business entity versus someone who does want to exit their business through a sale, a business transaction. And so, and also the type of assets that's being held. Certain assets have different taxation, number one, but also risks associated with those assets. So those are the types of questions that I'll be asking, a client is, what type of business you have? How important is liability protection? Are there any, specific tax implications here that we need to take into consideration? And what is your exit strategy for the business? Do you just plan on working on this business till you decide to retire and then you just shut it down, or you plan on selling it to someone? Go ahead, please.
Oh, I'm sorry. I was just getting ready to say, so one of the comments we had, and I was just going to jump in here too, just in case people didn't comment, that most of the types of entrepreneurs that we are serving right now, Chris, have food businesses. So they're food makers. And we see a lot of like beauty industry. So skincare, facial care, facials. So a lot of beauty brands and a lot of food makers. And so one of the comments was, I'm trying to have a convenience store on wheels. So sort of like a food truck, but a convenience store. So that's still kind of like in that food business.
Sure.
So that kind of gives you a general idea of most of that's the most. Of course, that's not all, but that's most of the ones that we're.
Well, that's those are great.
So
great businesses.
Those probably, yeah.
Good.
Go ahead.
Yeah, that's excellent. So that's helpful information. So the type of business can be a very big factor. So a business in which that you are, serving the public, presents a different type of risk than someone who is just, maybe holding real estate for, holding and leasing real estate. Maybe they're flipping houses or that type of thing. So different risk profiles call for different evaluation of the types of entities. I'm going to switch to the next slide here. So I'm going to walk through the different entity types and just kind of, what they generally are. So the sole proprietorship is not really an entity. So we won't talk about it very much today. And so in a sole proprietorship, you basically don't have an entity. You just operate the business as yourself. Okay. You may have a business business name. So maybe it's, Ty's Safety Home or whatever it is, or maybe it's, Trump Tacos or whatever. And so, but that will just be a doing business as name, but ultimately it's you directly doing the activities yourself. Okay. In that scenario, there isn't an entity to kind of create and, any shielding of liability or to worry about special taxation. It's the simplest form because you don't have to worry about maintaining an entity. But it's also does not provide a lot of the protections that some of these entities do. A general partnership is basically when you have two people that don't create an entity. They by default are a partnership. Okay, and so in a general partnership, you typically would have a partnership agreement, which lays out your agreements with one another. But there isn't an entity that you like. It's by definition an entity. It's a general partnership, but you don't register anything with the Secretary of State or anything like that. It's very similar to basically two sole proprietors working together. It's a partnership. Okay, and then you have a limited partnership, which is we won't get into a lot of talk about limited partnership or limited liability partnerships because they're just not in great use right now. And for the types of business we're talking about, there would not be much of a reason to use either one of those. And so, but basically it's a combination between a partnership and a corporation or a partnership in LLC. Both of those types are. They're very specific types of businesses and investments that you would use those types of entities that we won't get into today. They do provide limited liability, as we'll talk about, but that's about it. And there's even some holes in that protection that we won't even get into. But the most common entities formed today are limited liability companies and corporations. And among corporations, there are two different types. There's a C corp and there's an S corp. And we'll talk a little bit about the difference between those in a few minutes, but we won't dig into them heavily. But those are the two most common, and really between those two, it's an overwhelming choice of LLC being the most popular entity form today, and there are a lot of reasons for that. And Tanika anticipated that statement. She put it in the comments before I even said it. And so she's good. She's good. But those are the entities types we'll touch on today. We won't spend much time talking about sole proprietorship just because it's really kind of the absence of an entity. It's where you are by default without you creating any entity. But then there's, I guess I should say, there's one other type that I think is important to someone like Ty, and that is a nonprofit corporation. Now, I was thinking about for-profits when I created this presentation, but nonprofit corporations are an important type as well. We won't get into them much today. The big thing about nonprofit corporations is there's two kind of really key points I think to take home from just today. Nonprofit corporations basically have the opportunity to accept donations that are tax deductible by the folks giving you the money. So, for example, the Shore Foundation is a nonprofit corporation, and so when you give a donation to the Shore Foundation, you can deduct that from your taxes, from your taxable income, and you won't have to pay taxes on that portion of money that you give to Tanika's company, which, by the way, everyone should give some money to Shore Foundation. So just a little plug there for Tanika. So,
yes, thank you.
help keep this wonderful presentations like this one coming to you. So and Tiffany will be there to hook you up with all your connections and so
yes.
But anyway, so the downside with a nonprofit corporation is that and it's not necessarily a bad downside. It's just an implication is it's not your money, right? It's the nonprofit corporation's money. When money goes into the nonprofit, you can take a salary for the services you provide as a CEO, or but it's not like you have shareholders that then are entitled to all the money that's in the company. There are restrictions on how much you can pay yourself, and you have a board of directors that actually makes those decisions. You can't just decide on your own, so that you lose some control, and you lose some limitations on just how you handle the funds. So we're going to focus more on for-profit businesses today. But Ty, if you have any questions specifically deal with nonprofits, feel free just to type them in the comments section there, and we'll be happy to see like and I'll try to remember to kind of touch on some as well. So our focus today is really going to be primarily these other types of entities. So let's talk a little bit about liability protection. This is one of the main reasons people come to me and say, hey, do I need to set up an entity so that I can protect my assets? Okay. So what we're talking about here is, let's say I've set up a restaurant, okay, and I would like to sell food to the public. And my concern is what happens if, we get some food poisoning. Some spinach that I bought, came in tainted with E. coli, and I just made 100 customers sick. Okay. And so me, if in a sole proprietorship, it's as though I fed them all that food. Okay. Personally. Okay. With a company an entity that provides liability protection, the actions of your employees, of the business, the liabilities associated with that are not your personal liabilities. They stay with the business itself. We call it limited liability. Okay, so it limits how much your assets are subject to the liabilities and obligations of the business. So, for instance, if your business signed a lease for your restaurant, the landlord can't go after you as the owner for the rent in an entity that provides limited liability protection unless you sign a personal guarantee. Okay. And so if you have an employee that's driving a car and hits a bus full of nuns, you personally would not be liable so long as that employee was employed by an entity that has limited liability protection. Okay. And so the types of entities that have no liability protection is the sole proprietorship, which I said, which is like you just personally doing it. Okay. So, if you have an employee, they're your agent. And so you're treated just like liable just as much as they are for hitting the bus of nuns. And a general partnership does not provide any limited liability protection. The two most popular ones that do, as we mentioned, are limited liability company and corporations. But limited partnership and limited liability also provide liability protection. Again, this is one of the more important factors in deciding to set up an entity because most people are very concerned. Now, as I said earlier, that landlord's probably going to make you sign a personal guarantee saying that if your company doesn't pay the rent, you will. Okay, but so it doesn't protect you from those situations if you have an entity that has liability protection, but it surely does help protect you from the situation where the employee of the company hits a bunch of people making a food delivery. So when we're looking at whether to set up an entity or not, it's typically this risk analysis, okay, and cost comparison. First question is are there risks associated with my business that would be difficult to insure, or it would be too costly to have a large enough policy to really justify, not having an entity. Okay. So you basically look at what your business type says. So convenience store on wheels, you may have a situation where, you've sold up, alcohol to someone who is driving and they sue you and therefore, that's a pretty high risk potential, right? So where the person who's drunk, had too many maybe, hits someone and injures them, and the person injured sues the driver and the person who gave him the alcohol. Same for restaurants. They're serving alcohol, restaurants with tainted food, We have manufacturers that we represent who, like for example, maybe your health and beauty products. Maybe you end up with some bad product that hurts people, and which of course would never happen, I'm sure, to Tanika's company, but still, yeah, you have to be prepared. You think about that. Most of the time when someone has business activity, ongoing daily business activity, and particularly if they have employees, we recommend that they would have an entity with limited liability protection, because even though you can get insurance, the potential losses, if there was an injury or something like that, can be very great. And so we typically suggest that to have insurance, to have an entity with limited liability protection. However, let's contrast that with a very simple, like someone that owns real estate and leases it to other businesses. Okay, so that landlord that owns the commercial space and the retail space and rents the restaurant, a lot of times people that own real estate won't choose an entity. They won't create an entity because there are some tax implications with any entity that has limited liability protection. Has to pay a special tax in Tennessee called franchise and excise tax. And so what typically folks are doing is they're looking at how much franchise and excise taxes cost them. And some of that's based on the amount of assets you have. If you own real estate, it's got a lot of value, right? So there's a lot of taxes associated with that. So you would, but it's very cheap to get insurance for someone that owns real estate. The risks associated with owning real estate is pretty minimal. Someone slips and falls. Well, you can get an insurance policy that's probably sufficient for that. So, do you have a question?
I have a question. Yes. So when we're talking about the limited liability protection versus the insurance, right?
Yes.
So let's take the skincare example. So let's say it is ABC Skincare Company. And it's an LLC. So it's ABC Skincare LLC. Now, a lady says, well, your product made my face break out or whatever, and
Right.
I want to sue the company. Now, because the company is a limited liability company, corporation, because it is a LLC, can that person get personal assets
No,
from the owner?
it cannot. It cannot, unless
Okay.
perhaps you were like, you tainted it your personal self and handed it to them and put it on their face. I mean, generally speaking, no. A product, something that happens to them from a product, you are not going to be personally liable for those activities. Now, as a lawyer, it's different. So, lawyer, if I even though I have a corporation, if I personally commit malpractice, they can sue me individually, but they can also sue my company. But they couldn't get to all of my other, all the other partners necessarily. So, so there is. That's exactly right. That's what you're trying to protect. Those risks out there. You can get insurance that will protect you from that, right? But let's say it's like a class. They say you sold them 1 million tubes of that lotion.
Right.
Yeah, that's quite a lot of money. Most of insurance policies have a limit on how much they will cover, and so a limited liability company or corporation that provides that limited liability protection prevents that from happening. So from happening, they cannot come after your house, for instance. They will have to sue the company
Right.
and get and if they got one in the lawsuit, they can only get the assets of the company. They can't get your personal assets, and that's the benefit.
Okay.
So in that situation, it'd be very difficult to get enough insurance to really feel comfortable. And that's why it's pretty cheap to have a limited liability company. So why not have a limited liability company, right? And so that's kind of, it's a blanket limited liability protection. Comparing that to insurance, and also so you look at the cost of sufficient insurance and making sure you have sufficient insurance with respect to your business, and compare that to the additional taxes associated with F&E taxes for a business. And generally speaking, that and unless you've just got a really cheap insurance policy, like someone that owns and leases real property, it justifies, if you have an operating business, to have an entity with limited liability protection. Any questions about that before I move on?
No. So I think that is good right now. Yeah.
Okay, another thing that people look so limited liability protection. Then, if you want that, which most businesses are going to want, they will choose either an LLC or a corporation. Okay, now there's a big gap and difference in how limited liability companies and corporations are taxed. Okay, there are three different types of taxation for entities. Okay, you have disregarded entities from a tax perspective. Okay, again, this is a big consideration for deciding which entity. And so disregarded, basically, if you have one owner LLC or a sole proprietorship, it's treated as though the person themselves has actually earned the money that the company makes. Okay, so the entity just doesn't exist from the IRS's perspective. It's disregarded. So you earn the revenue and you incurred the expenses individually. So a one owner LLC is a good example of that. The IRS just disregards it. It's just like a sole proprietorship, as though you personally earned the income. There's another type of taxation that is called partnership taxation, and LLCs and partnerships are the ones that are taxed this way. And so in a partnership taxation scenario, that type of taxation, the owners of the LLC are treated so let's say you have two partners, 50-50. Each of those partners are treated as earning 50% of the revenues that the partnership earned, and they've incurred 50% of the expenses. And so basically the taxable income, each of them had to pay 50% of the taxes on the taxable income of the partnership. Okay, the corporate type of taxation is one that is disfavored in a lot of ways. Corporate taxation, basically, the corporation is treated as an entity separate from its owners and has to pay tax on all taxable income it earns. And then once they distribute the money that's left over to the shareholders of the corporation, the shareholders have to pay tax at their own individual rate as well. So it's you've probably heard this. Corporations have, and we're talking specifically about C corporations, and we'll distinguish in a minute. But corporations, if you're taxed as a C corporation, then there's two levels of taxation. They call it double taxation. So that the profits of the corporation are taxed first when it's earned by the corporation at that level, and then it's taxed again whenever it's been distributed out to the shareholders. And so double taxation can be a problem, right? There's two levels of tax, and it reduces the amount of money you can get to keep and take home and not pay Uncle Sam. So those are the types of taxation. And so we're going to walk through the differing entities so you can kind of see how each are taxed. But I'll just kind of run through it quickly now. Single member LLCs and sole proprietorships are taxed as though the individual owner has earned that taxable income. Partnerships, the partners are treated as though they earned the income in proportion to their ownership as partners or members of an LLC. Okay, so an LLC and partnerships, both those are taxed that way. They do not pay tax at the partnership or LLC level, only on the member level. Okay, the partner level. And then the corporation has two levels of tax. The corporation pays tax, and then the shareholders pay tax when the money comes out of the corporation to them. Okay, and then all entities with limited liability protection, as you mentioned earlier, have to pay Tennessee franchise and excise tax, and that oftentimes people try to avoid having an entity with limited liability protection, so they don't have to pay that extra tax. If they have a lot of assets like real estate, that's when they typically will not choose to incorporate or organize an LLC. So those are some taxations that have come into play. So we talked about general partnership. Yeah.
And if it's easier, Chris, I can wait to the end for questions.
No, I like it. Just jump right in.
Okay, so question: is it better to pay taxes every 3 months or yearly?
Okay, I should probably give a little bit of disclaimer. I'm not a tax attorney or accountant, so I don't really know the answer to that question. There's a guy in our firm that is a tax attorney, and he would be happy to speak to some of those tax questions if that would be helpful sometime, Tanika. But I think that in the end, my understanding is 3 months is The reason people do 3 months is so they don't get caught unawares. If you wait till the very end, you may find out you owe a big tax bill, and therefore, most people try to pay that on a quarterly. I think some businesses are required to pay on a quarterly basis, and so some businesses you have to do it that way. Tanika, do you know more about that?
Yeah, just a little bit. So Sheba, that's a great question. So, um, if your business is making a certain amount of money every quarter, then you have to pay quarterly. I don't know what that threshold is, but if you're just starting out, probably within your 1 to 3 year mark, it's still probably best to pay every 3 months, even if you don't have to. I am telling you from experience, paying yearly, trying to pay it at the end of the year, it catches up with you, and you're kind of hit hard by because you still have your LLC yearly fee, and then if you sell things, you have your sales tax, and then you have your franchise and excise. I mean, it can add up if you're
Yeah,
trying to do it
it
yearly.
can.
But I think quarterly is just easier to manage financially.
It is.
Great
So even
question.
if you
All
don't
right.
have to, it still often is recommended. So. Um,
Yeah.
So let's talk about the specific types of entities a little bit further now, just using the knowledge that we just learned, okay, about limited liability protection and taxation. Let's start with a general partnership. As I said, we don't typically use this for operating companies, and there's a couple of reasons why we do that. Because there is no liability protection. That's the main reason. And so we really kind of use this type of entity for businesses that have very little risk. Okay. And so maybe it's a real estate holding company. Maybe it's a holding company that maybe some people own stock together or something like that. And so we don't typically use this for like active businesses with multiple owners. We typically would use an LLC or a corporation for that purpose. Most of the time it really is commercial real estate leasing companies because there's no liability. And because there's no liability, there's no F&E taxes. So that's why people choose it sometimes. If it's a low risk and you can get sufficient insurance protection, then general partnership is typically what you would use. Okay. Is anybody out here operating under a general partnership? If you are, put that in the comments. I'd love to hear from you. Okay, so we're going to break up corporations into two different corporation types now. Okay, one is called a C corporation. So and the reason that it's like subchapter C of the Internal Revenue Code. Okay, for taxes. Okay, so we're going to walk through this. So with a C corp has double taxation. We talked about it. You pay tax at the company level and at the shareholder level. Okay, and so as a result, many people do not like to use the C corp. Okay. Some times where people definitely want to use the C corp is when they intend to take their company public. You cannot go public with an S corp, and public LLCs are complicated too. Almost every company you buy stock from on the New York Stock Exchange or NASDAQ, almost all of them are C corps. Okay, because there's no S corps have some limitations, and so typically when you have a C corp, it's because you have a lot of investors. S corps and LLC, you can have a lot of investors in LLC, but generally speaking, it's stock. Okay, because you want it to be publicly traded. The other reason people might use a C corp is their exit strategy. If you remember, that was one of the considerations. If your exit strategy, if your business is work till you retire and then just wind it down, then it's not that big a deal. If you're Harper's Naturals and you decide you want to grow this company into this massive company, or even just a company that gets in a thorn in the sides of all the major companies that sell health and beauty aids, then your exit strategy may be to be purchased by one of those larger companies. And so if that's the case, most times people like C corps because it provides certain advantages to acquisitions by larger companies. Some larger companies only buy C corps. They won't buy LLCs because it's so much easier. Number one, they can use their own stock as part of the purchase price. So it gives a lot of advantages, and there's a lot of tax advantages to buying a C corp that you don't have at the LLC or S corp level. Another thing too is the idea of Delaware corporation. But right now we're talking about just any corporations organized anywhere. If your intent is to be purchased by a large company or by private equity, okay, then oftentimes Delaware corporations or Delaware LLCs are more preferable because the law is very established in Delaware on entities, okay, the entity law. And that's talking about fiduciary duties between owners and shareholders and owners and members and directors and all that stuff. It's a very, very very established set of laws. And so people like to organize in Delaware. I don't know if you've ever noticed how many companies have their headquarters in Wilmington, Delaware, but it's a lot. Okay, all the big companies just about have their headquarters or their organization, their entity was in the state of Delaware. So that's something to take into consideration. We are a Tennessee. Just to tell you how popular it is, we are a Tennessee law firm, but we are also capable of organizing a company in Delaware because our clients need it. So we're all very comfortable with Delaware law. It's like the first type of business law that you learn. So C corps, again, double taxation. And you do have the limited liability protection, but it comes with double taxation. Typically, people do use this, and you don't get to do the double taxation unless you're not planning on distributing a lot of money out. That's one reason, or if you intend to go public, or if you have an exit strategy that wants to make it easier for someone to acquire you, you will oftentimes choose a C corporation. So that's C corporation. Any questions about any of that?
I was thinking, I thought I personally had, okay, so, and this may not be necessarily related to C Corp, but let's say there is a company so if a company is incorporated, do they have to choose a C Corp or S Corp, or is
Yes.
incorporated different from, okay.
So when you set up the entity, it's the very same. Okay. You at some point you have to, the board of directors has to elect to be an S corp. Okay. By default, you're a C corp, but if you make an election,
Okay.
you can become an S corp. And so here is an S. Let's talk about S corps then. I think it's a good segue into that. S corporations are organized the same way as a C corporation, but there's an election that you file with the IRS to be designated an S corp. So the benefits of an S corp is like you get taxed like a partnership. The corporation itself does not pay taxes on its earned income. Instead, the shareholders are treated as earning the taxable income pro rata in proportion to their ownership interest. Okay, and so the problem with S corps is it's got a pretty complex set of requirements. Number one is you can only have a maximum of 100 shareholders. Okay, that's probably not that big a deal for someone who's just wanting to set up a restaurant, right? And so, but another requirement is you can only have one class of stock. So sometimes people like to have voting and non-voting stock. That's not too big of an issue with an S corp, but the bigger issue is when you want to have different type of financial rights between the different types of stock. So in a C corporation, for instance, you can have what's called preferred stock, where someone gets a preferred return on their investment. You cannot do that with an S corp. Financially, all the shareholders have to be treated the same. Distributions had to be evenly made. That's part of that whole one class of stock. That you have to, if you have $100 that you're going to distribute, and there's 10 shareholders, you got to give them all 10. You can't give 1/8, 1/7, 1/11, 1/12. You can't do that. So shareholders must be individuals. Okay, so like you can't have another entity own stock in an S corp. And that's a real common like strategy of like structuring companies that are a little bit larger and more sophisticated, is they will have layers of corporations to protect against various things. The other thing is shareholders cannot be non-resident aliens. They cannot be, they have to live here in the United States. Okay. Question, Tanika? So as I mentioned
I
earlier,
think
some of
that's
the, one of the advantages of
yeah, can you hear me? I think my
yeah,
internet is.
there you go. Yeah, I can hear you now.
Oh, okay. I was just asking a question. Is S Corp similar to when you talk about shareholders? Is that like, for example, if a company is member owned or, I mean,
So
employee
so
owned? Employee owned. That's what I
so
mean.
I'm using some parlance kind of freely here, but in a corporation, its owners are called shareholders. In an LLC, its owners are called members, but they're just the same thing as a shareholder, basically. And in a partnership, the owners are called partners. So
Okay.
I'm using those interchangeably here. Um, so one of the advantages of this corporate, as I said,
Okay.
is that there's no double taxation. So so it's treated like a partnership. The shareholders are treated as though they earned and are taxed on the earnings of the corporation, and the corporation doesn't pay a separate level of tax. The other thing that's nice about this in S corps, it's a planning opportunity. Instead of paying yourself salary where you have to pay self-employment tax, you can pay yourself distributions, and distributions are not subject to self-employment tax. So that's another advantage of S corps. And if you've if you have a company and that you're paying yourself a salary, then the company pays part of the employment taxes and you pay part of the employment taxes. And so with the S corp, there are no employment taxes there come into play. So the disadvantages are these limitations we just mentioned. Not some people just it doesn't fit their needs, and then the other thing too is because just like with an LLC, and any type of partnerships scenario, you have to make sure you pay at least distribute out the taxes. So because whether the money's given to you as an owner or not, you're still taxed on it. So you have to make sure you do regular tax distributions. Same thing with an LLC. Anything is taxed like a partnership. So basically, just between the S corp and the C corp, you have to elect to be an S corp. You get the pass through the better tax treatment, and you still get limited liability protection. And so a lot of folks for many years, this was the only way to get that special tax treatment where you don't pay double taxation, but yet also get limited liability protection when a lot of the partnerships did not give you that opportunity. Well, then came along the LLC. So the LLC, this is why LLC has become the number one kind of entity choice now. I mean, it's far and away. It's probably 80% of entities formed today are LLCs, and at least 2/3 of them. Actually, it's been more than 2/3 for a while. So 80 to 90% at this point. I try to look for the more recent statistics. The last statistic I saw were kind of a part of the first part of 2000 teens, and it was basically 1/3 corporations and 2/3 LLCs. LLCs give you kind of the best of both worlds. You get limited liability protection, okay, without the restrictions, and the special no double taxation. It's taxed like a partnership, right? So you don't have to pay tax at both levels, the owner level and the entity level. But there's not all these requirements of an S corp. You have all these different requirements. With the S corp, we just talked about how many number of shareholders you can have, what types of shareholders there are. How you can't have different classes of stock or different financial rights amongst the owners. Well, LLC allows you to do all those things and still get the partnership taxation. And so that's the reason why you can have multiple classes of membership. So that's very common if you got one person who's very involved in the organization and somebody who's maybe passive, right? And just someone puts in sweat equity, another person puts in cash. You can treat the person with who put in cash differently from the one who just put in sweat equity. They can get their money back first or something like that. Then you can also give some people voting rights and then other people not have voting rights. Some people get financial rights and some people don't have financial rights. So you can split up the different types of rights of ownership. There are different kind of ways of structuring it. So you can have a governance structure that looks like a general partnership. It's a member managed where everyone get to decide together. All the owners get to decide on what happens. The other thing is a manager managed is kind of like a limited partnership where you have a general partner who makes all the decisions, or a manager who makes all the decisions, and then you have a bunch of passive investors, which means that they're not actively involved in business. and they don't get to vote on as many things. Or you can have it like a corporation, which is like a director managed, where corporations have a board of directors and they have shareholders. And so a lot of times if there's only one or two shareholders, they're also the board of directors, but you can basically set this up governance wise, just like a corporation. So there's all this flexibility to set up your entity however you want. But and you still get this partnership taxation. So you don't have double taxation of a corporation. So this is by far the most popular entity choice. And if any of you guys were coming to me now and saying, "Hey, listen, I've done the calculation. I can get insurance, but it's going to cost me a lot to get the level that makes me feel comfortable." And so I really want an entity with limited liability protection. I 9 times out of 10, I'm probably going to point you to the LLC, because the LLC provides the liability protection with all the benefits of the taxation benefits, and so it just, and all the flexibility in terms of how you want to structure the ownership of your LLC. And so whether you're a single member LLC or if you have multiple parties that are owners with you, I'm going to recommend an LLC 9 times out of 10. And so unless you're like, really trying to raise significant amounts of capital to really grow your business and then sell to a larger company, generally speaking, it's going to be an LLC that's chosen. So before I've got all kinds of war stories I can tell, but I think we won't need to go into those. Suffice it to say that it's choice of entity is an important decision. It's got a lot simpler because of the creation of the LLC. It's a pretty new creature. It's only been around for about 20 years. I'll say a little more than that, probably about 25 years. So that it most of the time is your choice. So any questions? No?
Yes, go ahead.
Okay.
Go ahead.
Cool.
Yeah.
So I know you mentioned, well, we didn't really touch upon this much, but I was curious to know what information you might know about B Corps and B corporations.
Say again now? B Corp?
Mm-hmm.
Yeah, so social benefit organizations. So, honestly, Tennessee has an act that allows you to create a B Corp. I was on a committee that actually reviewed that act and negotiated that legislation as it was being presented, and so there were some people on the committee that really didn't feel like it was necessary to create that different category. It's just basically an election you make whenever you file your documents with the Secretary of State. It's a pretty simple process to become recognized as a social benefit organization. The reason why they created that type of entity was they were concerned that that corporations could be sued by their shareholders if they tried to take into account anything other than maximizing profit for shareholders in their decision making. So some people felt like directors of a corporation, their role was to maximize the profit of shareholders, and that's it. And they could not take into account any social benefits or social consciousness or social motivations. And so that was something that they decided they wanted to change in the legislature. In Tennessee, that's really not the case. We didn't really need a benefit corporation designation, honestly. It's established law in Tennessee that the directors can take into account anything that they want, including the benefit of the community and the society around them. But they're becoming a very important type of category nonetheless. And the reason why is because it's a signal to the world that, hey, when you invest in our company, you're investing not just in profitability, but we are very, very socially conscious in whatever type of, maybe it's environmental consciousness, maybe it's social equity. It's they can make it very clear in their documentation and their marketing that, hey, this is a motivation that we're going to have as a company to protect the environment, or promote equity, whatever it might be. And so it has become a very, very important part. So there's some pretty famous ones, entities out there that really kind of focus on. Tiffany, which one did you have in mind?
Thinking about Patagonia.
Yeah, Patagonia. So they're very, very environmentally conscious, and they're very focused on conservation. And so Ben and Jerry's is that way, as I understand. I don't know how many of those are actually social benefit organizations, but I think there was a shoe company too. Tom's, is that what it was? I think that was that way. So, but yeah, so that is a common way. And again, it's really not necessary to get that designation, but if you do, it's kind of more of something that Tennessee did just as a way of not getting left behind. Basically, hey, we support social benefit corporations as well, so organizations as well. So it was like, hey, come do business in Tennessee. That was really the focus. That was the argument for the whole legislation they were making. So we were like, we don't really need this. And they're like, we want it. So, okay.
Ty, I think you had a question.
So because I don't have a business mindset, I'm trying to learn all of this.
Yeah.
And so I was just trying to figure out, when it comes to like liability, as far as like a nonprofit, with the nonprofit point of view, how would this all fit into that?
Good question. So yes, so nonprofit corporations have limited liability. So they don't really have owners, okay? And so there's really no reason to even sue the owners, because again, nonprofits are it's kind of like the public owns a nonprofit corporation, okay? They have a board of directors, okay?
Right.
And a board of directors they're the ones who govern and make the decisions on and appoint presidents and that kind of stuff. Like Tanika's got, a board of directors with Shore Foundation. And so those board of directors, thankfully, because the state looks at them as having a very, like, what their role is being very important to society. To their volunteer role, they're typically not paid, right? And so directors of a nonprofit corporation have limited liability protection themselves. The statute makes it very clear. It's very, very difficult to sue a director and for any type of liability of the company. You just can't do it, really. So if you would be a director or a president, you would not personally be liable unless you were the one who actually did the bad act,
Okay.
So it's a great question. Very good question. Any other questions?
I'm double checking the chat. Tiffany, did you see any more in the chat? With some comments, but not questions. Of course, I put one up there that you explained this last slide perfectly, this LLC slide. So that really helped them. And then we asked the question about, so somebody was like, their son owns a lawn service and does pressure washing, and they want to become an LLC. So based on this conversation, it seems like that is the way that they probably should go.
Yeah, I would, particularly if there's one owner, it makes perfect sense to do an LLC. And let me tell you why. You don't have to file a separate tax return. Most of these entities, you have to file a separate tax return for them. All of them, really. Even an LLC that has multiple owners, you have to do so. But a single member LLC is disregarded as an entity. The LLC is disregarded. So it's though you're operating like a sole proprietorship. So you just have a schedule that you attach to your own personal tax return that shows all your business income and expenses associated with that single member LLC. And so it's a very simple thing. The organization's pretty inexpensive. I would say, just my one more story that I would tell you is that, like, be careful if you try and do this on your own with like LegalZoom or things like that, because there often are times that we have had to go in and actually kind of clean up some things with people using their own forms. I would recommend highly that you have an attorney help you. Anytime you have more than one owner, I would highly recommend that because there's a lot of questions that, this would be a whole other seminar, Tanika, of like, a business with partners, the issues you have to figure out, and on the front end, how to handle so that when you run into those issues, you don't get in fights, and so that would be a terrific one to have sometime in the future, Tanika, with someone else, or myself. And so, but as a single member LLC, it's not that complicated. You can pretty well do it online, to be honest with you. There are a few questions that you need to get right, and the type of entity that you are and stuff like that. And then you have to make sure that you follow the corporate formalities, the company formalities associated with an entity. So that is, so it's fairly easy to do that even online through the Secretary of State's office. But Tanika, if you could put my contact information in the comments, I have a private chat that I can't, but I don't think I can actually post the comments. So if you could put that in there, just my name and email address, that way people can feel free to email me any additional questions they have.
Yes, Tiffany can do that. I don't have, my phone is gone now, but yes, we can put your name. We have your email in there. Tiffany, can you see his email in that chat, or can I just see it?
It's in there. I don't know if everybody else
in the chat. I don't think that I'm able to comment though.
Yeah, you have to
on my end.
No, we just want you to put that inside the Facebook Live.
Oh, yeah.
Just put there. They feel free to just email me any questions they have. If particularly if they're getting ready to set up an entity and they're curious about, like an LLC, which one should they have? Most of the time with a single member LLC, I typically suggest manager managed, and though member managed and director managed, all of them can really work. Honestly, you just have to make sure that whichever one you choose, you act that way. And that's the bigger question. It's like, what is it? Just make sure that you're acting as a manager, not a member. If you're a manager managed, and you effectively point yourself as a manager managed. So there's documents you file with the Secretary of State, but then there's some other documents you need to have prepared. And so we're very happy to help out with anybody with that, if it would ever be something of help to them. We offer discounts to Shore Foundation, Roots Collective members and participants. So we would definitely be willing to help out anybody out, on an economic basis, affordable basis. So, and we're fine with even paying us over time, those types of things. So we can make those arrangements out at times. So.
That's awesome. One last question, and thank you, Chris, for that. So this is probably a separate conversation that we could probably have on a whole nother Zoom. But if you could, in a few minutes, sum up the difference between an employee and a subcontractor.
So one of the big factors big questions you have is, should I have someone as an employee, or should I treat them as an independent contractor and give them a 1099? Okay. I will tell you that it's a pretty complicated analysis. Okay. Because it doesn't really matter what you do. Like if you just say, hey, I'm going to 1099 this person, but the IRS looks at it to say, well, are they an employee, or are they an independent contractor? If it looks like a duck, quacks like a duck, walks like a duck, it's a duck. It doesn't matter whether you call it a squirrel. So they look at the reality situation, and it's a facts-based analysis. And it's generally that the rule of thumb is, if they have the ability to kind of choose when they work, how they work, use their own tools, and there's not like this minutia detail control by you, they can be an independent contractor. If you're basically supervising all their work, telling them when to work, giving them a place to work, then oftentimes if you're exercising a significant amount of control over their freedom and how they go about things, how they pay you. If you're just paying them they're giving you invoices, that's helpful, but it's not determinative. It's more control, your level of control with the employee. And if you've been 1099ing someone that should be employed, then you're going to be liable for back employment taxes. So it's very important to kind of have that conversation with your accountant or your lawyer to see how they should be classified, and get that right on the front end so that you don't run into any audit problems in the future, because the IRS does audit this frequently.
Yes, and I come back to this all the time. Everybody who knows me knows that at least once during a workshop, I bring this up because so many new entrepreneurs want to do the easy thing in terms of like, well, I don't even know how to do payroll. I don't know how to hire employees, but you have to figure that part out and you have to get somebody to help you, because paying people under the table and trying to pay them as a 1099 person, it just doesn't work when in actuality they are an employee. I promise you, the IRS will find out. You will have to um, pay those taxes back. So it's an important conversation that we'll continue to have.
Well, Tanika, thanks for having me. I really appreciate it. My wife is waiting for me to go on a date with her, so I probably
Oh yeah, that's right. Well,
probably
you
need to
should
cut
head
off.
out. Thank you so much. We don't have any more questions, so I think that is great. If we do, they have your contact or they'll get
Email
in
me
touch
your
with me.
questions. Email your
But we thank you
questions.
so much. Thank you guys.
It is my
Yes,
pleasure.
thank
Thank
you
you all
so
so
much
very
for
much.
those who will tune in later. Yes. All right. Well, good night, Chris.
Good night, guys. Thank you.
Bye-bye.